Is vaccine news change of the direction of this crisis?
I don't think so, not just yet.
You suggest the US government to re-lock down the economy?
I think that the bar for doing that is much, much higher than in other places.
The US dollar is going to start declining?
Trend coming to an end doesn't mean that it's going to fall. It just means that it's not necessarily going to rise to the extent.
Is China a place where money comes from and to sell products, or a place where to invest, or both?
I think it's both.
Thank you, Peter, very much for your time to join Top Investors Talk. So first of all, where am I getting you today?
Yes, thanks for getting me from Australia.
We saw some significant development in the vaccine news. Do you see, is that a change of the direction of this crisis?
I don't think so, not just yet. I think it's probably early days. There was always a juxtaposition between the cases increasing quite rapidly, and then there's been a number of potential vaccines. So, I mean, maybe the best thing about the news yesterday for the vaccine was at least we're not talking about US politics.
You mentioned the US politics. We're supposed to have a new president of the United States in the next 4 years. Generally, what does that mean for the market, for your strategy? I see the market are quite happy about that.
I think the more interesting thing for the markets is less about that and who will be president, and more about who controls the purse strings, and in particular who controls the Senate. And at this stage of the game, and it's not 100% decided, but it would appear that the Republicans will still retain the Senate, and what that means in practice is there's a split House, and that has some pretty important implications for the markets. The first one is that the big stimulus package that was potentially up to $2 trillion is less likely to go ahead. So it'll still go ahead, but more around the vicinity of $1 trillion. So that was viewed positively by the markets. The big corporate tax hikes that may have occurred if the so-called blue wave had moved through and the Democrats had controlled both the House and the Senate is far less likely, and obviously equity markets like that. I think the final thing to note is that foreign policy undivided is probably likely to be more predictable than it has been historically.
Specifically, you also mentioned there is no blue wave. What does that mean for the market anticipated fiscal support?
I think it'll be more difficult. So there'll still be fiscal support, and I mean, even with a split House as we have at the moment, I mean, you've seen very strong fiscal measures early in the pandemic, so there's definitely no impediment to fiscal policy being passed. But I think given the split House, the size of fiscal stimulus is probably not going to be as large as it might otherwise have been if the Democrats had controlled both the House and the Senate.
If it is more difficult to get the fiscal support, do you see any more room for the monetary support?
I think that the Federal Reserve certainly has a lot more firepower. They've obviously shown some of that already. I think that if the economy was to slow down again, they've got a number of measures that they could certainly enact. At the moment, I think that it's probably not necessary. I mean, the economy, while relatively benign, is in the early stages of recovery, and in terms of liquidity within the market, there's ample liquidity, so I don't think they need to provide for that at the moment either.
Yeah. You know, the US politics, another thing is the risk of a protracted legal challenge is very real. Should we pricing in that?
I'm not a lawyer. I think that that's probably less likely of an outcome. I think that we'll end up having a new president in the US, and we will end up having the Republicans control the Senate and the Democrats control the House, and that's pretty much what the market, I think, is factored in as well.
You suggest the US government to re-lock down the economy?
I think that the bar for doing that is much, much higher than in other places. So at this stage of the game, no. We've obviously seen decisions made, particularly in Europe, and I think that is more than likely to lead to more of a W type recovery there. But I think at this stage of the game, the bar is very high for the US to have the same measures that it did back in March and April.
There is a CVS decision-making process in Russell investment, which means cycle, value, and sentiment. So generally tell us what is your view in the fourth quarter and maybe several quarters ahead.
Sure. So if I touch on cycle first, so cycle is all about the economic cycle, and it's early days, but the cycle factor is positive. There's obviously risks. The risk that we talk about is, on the one hand, you've got the COVID cases, particularly in Europe and the US, increasing. On the other hand, you've got vaccine candidates that are expected to wrap up their final stages relatively soon in the fourth quarter. So overall, very early cycle, positive. When it comes to valuations, they're slightly expensive around the world, particularly obviously mega cap growth companies in both the US and in China. Valuations for Europe are a little less expensive, and emerging markets even better values. And then finally, in terms of sentiment, which is really balanced at the moment.
Yeah, I read your house view. In your house view, you said that there are three major market trends could reach a turning point over the next few quarters. The first is the outperformance of US stocks versus non-US stocks. Second, the outperformance of growth stocks relative to value stocks. And the third is decade-long upward trend in the US dollar. So I'm very interested in the third one. You mean the US dollar is going to start declining?
I think that the long upward trend in the US dollar may be coming to an end, and that partly is reflective in relative interest rates. The other thing, though, is trend coming to an end doesn't mean that it's going to fall. It just means that it's not necessarily going to rise to the extent that it had over recent times.
In terms of the first and the second trend you mentioned, how will that impact your asset allocation, I mean your position?
Yeah, so the second trend in terms of the outperformance of growth stocks relative to value stocks, we typically in our portfolios have a view that securities with good quality earnings at reasonable valuations typically do well. What we've seen over the last 18 months in particular has been that value stocks have really, not just in the US but across the world, underperformed to the extent now on a sort of historical basis that they would be argued to be as cheap as they've ever been relative to growth stocks. So we've actually been positioned to be leaning a little more into value as that's occurred, with I mean, in its early days, the change that we've seen more recently, I mean, that's beginning to play into the way that we position our clients' portfolios, but I think it's really early days.
What will be the main legacy of this pandemic, and how will that impact your investment strategy?
We shouldn't underestimate what has actually occurred in terms of the pandemic and its influence on world economies and obviously individuals. I think for sure we can say for certain that one of the legacies will be high government debt levels. I mean, that is a truism. I think that, just given the amount of fiscal stimulus that governments almost around the world have used, there's going to be much higher levels of government debt levels than we've seen. I know that people talk about other changes that are occurring, like globalization potentially will diminish. There'll be changes in terms of business travel and in terms of office space and working from home. But I think that it's far too early to say that everyone's going to work from home. No one's going to go on international holidays.
Obviously, you miss your Seattle office very much.
I do.
Let's talk about something about China. Is China a place where money comes from and to sell products, or a place where to invest, or both?
I think it's both. As I said, it's the second largest economy in the world, but I think that in particular there's a strong demand for wealth management for Chinese people and retirement solutions. So I think that there's the ability for international expertise to be taken advantage of.